Thank you very much, Helen. So this is the moment everyone's been waiting for, the big showdown. Hopefully we're going to have lots of dissent and disagreement. We thought we might start by picking apart some of the previous definitions from David, the previous speaker, but let's see how we go. So as Helen said, I'm Tom Hawkins. I work for Accenture. I lead our CBDC and digital assets practice for EMEA, a small and mighty team. I will pass over to the panelists to do a quick introduction to themselves. Starting with Ousmène, sorry.
Hello, my name is Ousmène Mandeng. I am leading a small boutique consulting firm. For disclosure, I work a lot with Accenture on digital money. I'm an economist by training. I'm also visiting fellow at the London School of Economics, and I've worked more than 20 years both at the IMF and in finance, and have been interested for a long time about the deficiencies in international payments. So delighted to be here. Thank you.
Hello everyone. Duncan Trenholme. I work at ICAP, which is one of the top 5 venue and markets operators across financial, energy and commodities products. I'm a managing director and co-head our digital assets business, which essentially means we have 2 products in crypto. So yeah, I'll start there.
Thanks. So Ollie, Carew, Director for FinTech Consulting at EY. Seems there's quite a few consultants up here right now. Cover a whole range of areas, including our work on the regulated liability network, on Project Agora, basically most things that focus on digital currencies and digital assets. And prior to EY, I was at the Bank of England, where I was part of the FinTech team and CBDC unit, so working on the policy side as a central banker and regulator.
Hello everyone, my name is Sophia Shluger. I'm Chief Commercial Officer at PVO1. We are a regulated debt capital markets business on blockchain. We issue digitally native bonds under English law on chain. We've done over 65 million worth of issuance volumes of US Treasury bills on chain. And we also help crypto native institutions raise debt financing via corporate bond issuance. Previous to that, I worked at Amber Group, one of the crypto native market makers. So I've been in the crypto blockchain space since 2021. And before that, like many of the panelists, had a TradFi background working across both the public and private markets.
Thank you very much. So I was wondering, Ollie, if you could maybe start us off by describing what your definition is of tokenized deposits, CBDC and stablecoins, and then we can see if the panel agree with you or if there's any dissent as a starting point.
Sounds good. And I can maybe do it controversially if we want to try and get into it. A full disclosure, unfortunately I missed Dave's discussion, so I've missed what his definition is, so someone else can have to unpick that one. So I think tokenized deposits, so tokenized commercial bank money, I think the key to it is it's commercial bank money as a deposit, so it's still an account-based relationship, so that's key. The other thing is it's a liability of the commercial bank. The fact that it's a token representation is kind of the smallest part of that, right? And we've previously discussed this. It doesn't really, well, it shouldn't really matter maybe how you record your liabilities, whether you want to do it on a traditional database, going back to the first session we had at the start of the day, on an Excel, or whether you want to do it on a chain. The point is, what is the instrument at the heart of it? And that is going to be a commercial bank liability. A CBDC, however, is a liability of the central bank, right? And again, that doesn't have to be put on a specific type of on-chain ledger. It could be a traditional ledger. The point is, it is a digital representation of a liability on the central bank. I think the interesting one we'll talk about is not on the wholesale side, because wholesale CBDC arguably exists. It might not be in a tokenized form, but electronic central bank wholesale money exists. It's the retail one where it gets quite interesting, because at the moment, most of us, the only central bank money we ever access is cash. And so this is talking about something slightly different in the sense of accessing it as a digital instrument. I'm happy to pass to someone else on a stable coin. Again, it's all about the liability, and I think whose liability that is. It is on the non-bank traditionally issuer of that instrument, although then again, if you really want to go to it in the heart of something, maybe you have some claim on the money that's held at the banks that they use to back those assets as well. But I don't know if others want to disagree and we can get a debate going around this.
Sophia or Ousmène?
I don't think I disagree. I think, when it comes to money, the key is who the issuer is. So it can be the central bank, or it can be another entity. Most money is issued by banks. I think you're quite right. It's not the format of money that is important, but it is whose liability it is. So maybe on the stablecoin, it's a term I'm struggling with, I have to say, because what is a stablecoin? It's just a commitment to convert at par a given nominal amount, denominated in a given currency. Right? It's like a bank deposit, right? You have a claim, you have an account at Barclays, it says £100, but actually it has nothing to do with pounds. It is a claim on Barclays that is denominated in pounds, that is convertible into pounds. So you can go to the ATM machine and withdraw pounds, but only then you have pounds, right? So a stablecoin is exactly the same thing. So there's nothing new about stablecoins. Right? What is new is the format in which it's being issued.
Really?
But the issue is, it is simply a commitment at par. Yeah? So I would argue, if you want to issue a stablecoin in the UK, you have three possibilities. You can become a bank, right? Or you can become an e-money licensed institution, or you become an asset manager, and then you issue a money market fund share. But we don't need a fourth category of stablecoin. I don't think it means anything. That would be maybe my variation on your comment.
You sound like you disagree, Duncan.
Well, I disagree with the comment. There's nothing new about a stablecoin. I think I agree with the definition in general, but I think what's new about a stablecoin is the network or platform that it's issued onto. And I also disagree with the statement that it's what the type of money is that's the most important. I think people undervalue the network effects and the distribution of what platform this product is issued onto. And one of the reasons why stablecoins have seen such rapid growth is the fact that they're bearer instruments, they're transferable, and you don't necessarily have to have a relationship with the issuer. You can transfer it onto someone else, and as or when they want to redeem it, they can go to that private institution and then redeem it. And I think that's been important in crypto and blockchain networks because the distribution is broad. You've got anyone that has can download a digital wallet on their phone and has access to the internet that has a network they can connect to. And there's been sort of clear demand for a fiat money-based instrument on that system, and the system has very broad distribution. So I do think there's something new about stablecoins, and that's the method of registration and transfer.
I'm happy to go back, but I want to, obviously, Sophia, go ahead.
I kind of agree with you. I guess since I'm more in the tokenization space, you mentioned tokenized deposits. I mean, just as a reminder, obviously, you can tokenize any asset, really, whether it's cash, equities, fixed income, real estate, luxury goods. I mean, we can really go down the curve in terms of tokenizing anything with, real-world value. I think there's an interplay that's very interesting between tokenization and stablecoins, because actually stablecoins is like the original tokenized asset, right? It's on-chain, it's leveraging DLT, all the benefits of blockchain technology. And so, I'm very bullish and positive on stablecoins, not just because our products are denominated or settled in stablecoin, but also because it's a $169 billion market and growing. And what underlies that, is the demand for dollars. And we see a lot of interest and activity, obviously, like in emerging markets, where there's a hunger for, the non-bank to be able to access dollars, deposits, U.S. Treasury, risk-free yields on chain. And the way in which they can do that is via blockchain and crypto. So I'm generally very bullish both on tokenization and stablecoins, and I see real value and growth in it.
No, look, this is not the dollar thing is one thing, right? Access to foreign exchange is a big issue. I was just in Washington yesterday. We had a whole day discussing precisely, evolution of the international monetary system, and the role of the dollar is key. It brings enormous advantages given its network effects, but also huge disadvantages that we all depend on monetary policy in the United States, which, is not looking at the demand for dollars in the rest of the world, but just, at monetary conditions in the US, and that's a big dilemma. I agree that, David made a few interesting comments about everyone wants dollars, and that it's true. If you think about the foreign exchange market, it's the most important financial market in the world, and 9 out of 10 transactions, the dollar is either the buy or the the sole currency. So it shows you how enormous the demand for dollars is. The stablecoin idea, and here this is not to minimize there is innovation, but I think it's on the distribution side. As you said, you can issue it on a chain. I think for me, it's all about the blockchain, which I think is the innovation, how we distribute money and can access money. But we also, I think, have to be I am concerned about the KYC implications it may have. You see, I mean, it's easy. You say you can just download a wallet somewhere, but the idea is we have rules normally by which, if you want to open a bank account, you need to be KYC'd, and we have AML concerns, etc. And we need to find a way that this will also hold for those using these stablecoins. So that's my only concern. You see. And that's why I prefer, if you want to issue a stablecoin, well, become a bank, because then we know what the rules are, you see. This vacuum in which stablecoins are operating, I think, is a bad idea. Circle has now applied and now has been issued an e-money license in France, and I think that's the way forward. That's a transparent framework under which, then euro-denominated coin, I think, can circulate. With that, I fully agree. But this idea of having no license, or I think it's just regulatory arbitrage. That shouldn't be the case. That is my concern.
How do you, when you think about the issuer of the stablecoin, which I would agree should probably have some regulation behind it and adhere to some standards, but in terms of the fact that you can, like cash, transfer a stablecoin to anyone. And there's no KYC perimeter on that side.
Yeah, true.
And it's only when you come and redeem it that you would have to be KYC'd by Circle or something like that. And do you feel like you should introduce, I guess with cash, right, if we go above a certain notional, people start to ask questions. That probably wouldn't happen with stable coins and probably isn't happening with stable coins, but do you think there should be some rules around that, or do you think you should stop people being able to just transfer it to anyone?
If you could answer that, then we'll move on.
Yeah?
Yeah.
Okay. No, look, it's really interesting, because cash indeed, right? Cash is a bearer instrument, as you rightly say. And there's no KYC when we transact in cash. No, absolutely. And that's also a problem. That's why cash is, is great for criminal activities. And so that's a concern. And I think we have to trade off. Anonymity was mentioned as a big advantage that stablecoins can give us. But I think as a society, we have to weigh between the costs of anonymity, which could mean illicit transactions, and then the benefit of privacy. So, I would, for me, cash is a relic, right? And I think it should just disappear. And I would feel better if all of our monies, were following the common rules. I think, but those rules should be KYC-based rules. That would be my preference.
Okay, so we want to try and focus this debate in terms of thinking about the UK context. So of adoption to all of these different new digital monies, which do we think might dominate? What use cases might they serve? How do you think they'll move forward in the UK context? So I think to start with, it would be super helpful for us to kind of set the scene around UK regulation. So I saw recently the Bank of England, I say recently, in July I think, the Bank of England issued a paper on the future of monetary innovation, which I think was quite exciting, at least from my perspective as someone that's interested in the field. But I wonder if, and I had written down that it would be Sophia, but someone else can take it if you want. What's your view on the kind of regulatory landscape in the UK today? Is it supportive? Do you think it compares, I don't know, favourably with the EU, for example?
Yeah, it's a difficult question, and I'm not a legal expert, and this is not legal advice, obviously. I think there are many people here today that have perhaps spoken on this and all the other legislation that's coming down the path, but generally I think the regulators are looking very carefully at this. They're seeing the amount of growth and interest and demand, and it's something that you can't ignore. So I think they're going to be very prudent and careful in terms of how they look at it, the use cases, how it can benefit the UK, aid in innovation in the payment space. But I think, of course, they're going to always stay a bit mindful of protecting the consumer and ensuring that it's consistent with the regulations that have already been set forth. So I don't think they're going to come out with anything, let's say, that's surprising or very different. I think it'll be just an adjustment of the existing regulation to adapt to these new tools that are available. There are many jurisdictions around the world that are looking at stablecoins, some other ones that seem to be a bit more forward, whether that be in the Middle East or in Singapore with MAS. So TBD is what I would say.
What would you add to that, Ollie?
Right, so I think it's interesting because, so the discussion paper is very interesting because the bank is taking a look at actually at retail payments in a way that hasn't done previously, and maybe there's something to be said about why they're stepping into what they could see as maybe a bit of a space that needs some direction. I think that discussion paper does quite an interesting place in that, but there's two other things in the UK that we need to think about. So one is the Dear CEO letter that actually got published a while ago, which covered different forms of money, including tokenized deposits, in which they basically said, if it's relationship and account-based and it doesn't change the nature of it, and you can do single customer view file and do FSCS protections, pretty okay with it, we think. If it becomes bearer to some of the questions down there, we need to have a different discussion. Not saying no, but we need to. Then, to your point, Ousmène, banks issue stablecoins. Well, they were pretty clear in that discussion, in that Dear CEO letter. They said, if you're a bank and you want to issue a stablecoin, separate legal entity, separate branding, you've got to do it totally different. And then linked to that, I mean, what would get adopted, what wouldn't? So why aren't stablecoins, why don't we have loads of GBP stablecoins? Part of it, I think, is this emerging dichotomy in the regulatory framework that we have for stablecoins in the UK. So we have two regimes emerging, one for non-systemic, which is going to be supervised by the FCA, and one for systemic by the Bank of England, and that essentially as an FMI. And there's some challenges in there because if I'm an investor and I want to set up a GBP stablecoin, so I will have the conversation at the start of saying, right, we're going to set up this stablecoin, and the business model is we're going to hold our backing assets as commercial bank money and some other high-quality liquid assets. We'll get some gilts as well, and we'll get the interest off that, right? And that's our business model. We'll lower the fees to everyone, that's great. But at some point, we're going to become, well, we could become systemic, right? Well, what does that mean? Like, what's the threshold for systemic? There isn't one. It's not like MREL, where suddenly you hit a threshold and they go, right, that's the number, black and white, you're over it, you've got your MREL, for resolution. Instead, it's slightly dark arts of, yeah, we think you're important enough, you do some systemic things, therefore we're going to change you. And at that point, the proposal is you can no longer hold your backing assets in commercial banks or in high quality liquid assets, right? Your money has to be held at the Bank of England in central bank reserves, and you cannot earn interest off it. Now, for that investor, what I'm basically saying is, I've got a business model, and at some point, that business model may change entirely. So why are people going to back that, right? That uncertainty, I think, is a real challenge. I know the bank has said they'll come out and work with the FCA to kind of manage that, but there is a real issue there of a step change. And then to some of the points down here I like is, we've talked about this before, I've talked about this with a few people, but the bank's take on why it has to be systemic, you have to hold it as central bank money, is basically they're saying, if you're that important, we need the safest asset, right? But there are other ways to manage things like that. So commercial banks and others have a resolution framework. We have wind down plans. Why not have that for systemic stablecoin issuers? And then they can continue to hold their money in commercial banks, which are prudentially regulated, and you could have some sort of wind down plan and resolution and payouts and everything else. So again, you could use what is there and apply it over rather than creating this new approach. And the other thing is, you could also allow them to be a bit like Scottish banknotes, which is they're part remunerated. So you don't have to have maybe as much interest payment when you're systemic, but you could have some, because that's what Scottish banknotes have as well. And also, I think the one last thing to throw into the stablecoin thing is, by doing that, the bank is basically creating synthetic retail CBDCs. And is that a world they want to create and have? And how's that going to compete if they want to issue their own digital pound? So I actually think the reg framework in what's been issued on the stablecoin side does make it more confusing, does throw up some challenges. I think compared to the tokenized deposit one, if you don't make it bearer, there seems to be a clearer route. So I'm going to throw my hat in the ring and say I think maybe we'll see more on the tokenized deposit side rather than the stable coins and CBDC because of those reasons.
Okay. I guess, Ousmène, from your international perspective of where you've seen stablecoin adoption, tokenized deposit adoption, and regulatory barriers or support to those pieces, do you have a perspective in terms of how the UK compares to other markets?
Yeah, I'm not too, to be honest, I think the UK is not very advanced, I think, then.
Okay.
I mean, that's for sure. But maybe for the right reasons. You see, we have in Europe, so I'm from Germany, we have MiCA now. Now, if I look at MiCA, what MiCA is trying to do, I don't think it adds any value. I don't think we need MiCA, right? We can say if you want to issue a stablecoin, you become an e-money licensed institution and you issue an e-token, e-money token. And we wouldn't have needed a new regulation for that, except for the VASP or the CASP, these crypto asset service providers. Yes, I can see why we need maybe a slightly lighter regime, want to offer peripheral services to the issuance or handling of these tokens, but I don't think we need anything like a MiCA. So in the UK, therefore, I'm not too sure how far, I'm contradicting myself, but maybe they aren't actually very far behind, because I would argue, sorry, I made the point already, if in the UK you want to issue, I wouldn't call it a stablecoin, but if you want to issue money, you can, you become a bank, or you become an e-money licensed institution or an asset manager, and that's all we need, right? I mean, we're not concerned about the format in which you issue, whether your deposit is registered on an Excel spreadsheet or on a private cloud or on blockchain. We don't care as regulator. You have to be able to handle it from an IT perspective as a financial institution. But the framework we have in the UK is very clear. I don't think we need anything more, when it comes to this stablecoin thing. So therefore, I wish the UK, looking at MiCA, hopefully recognizing it doesn't add any value, let's not go that route and say we already have everything. Maybe we need something again for CASPs, but we're fine. We should allow entities that want to issue money to do it under these three regimes we have.
Excellent. So we're hearing people already start to take positions, which has happened by osmosis or accident, who knows. So Ollie's saying that he thinks that tokenized deposit adoption will predominate over stablecoins in the UK. Duncan, where are you at? Or are you a crypto guy? Are you a stablecoin guy? Are you a CBDC guy? Or a bit of all of the above?
Well, I work at a major financial institution, so and I also have my own personal views. So somewhere in between.
Okay.
I think we should really focus. I think it's about where the use cases are and where there's demand for these type of products. And I would always question: does the user in the specific example already have access to some form of money which is fit for purpose? And if they don't, then potentially there's the case for a new product. Which, harping back on the crypto ecosystem, people who transact in crypto, which is, yes, there's a lot of crypto firms, but there's a lot of traditional financial institutions as well. When they are transacting on that technology, the best fiat equivalent that they have at the moment are issued by, a variation of different unregulated private institutions. So yeah, I would say, probably for the purposes of this debate, I'll take the hat of someone arguing for crypto and stablecoins.
Okay.
I like cryptos too, I have to say. So.
Right, good.
No, I think this is where the innovation is with cryptos. It's outside money. It's something for economists very special, and I think cryptos.
And Sophia, where's your head at?
I'm wearing the same hat as he is.
Right. Okay. So we've got 2 versus 2, kind of. Although we've somehow intermingled two together.
But hang on, Tom. Is your question what we would favour? Because again, I think as Duncan said, the use case. Right?
So I think it's what is the question? It's either what would you favour or what do you think is most likely. So maybe we can take the 2 questions in turn. So I think Ollie and Sophia have kind of gone with based on our understanding of the regulatory environment, based on what we see as happening. Within the UK, they believe that tokenised deposits are likely to be adopted more in the mainstream and potentially earlier on. So I think the question is, based on that, do you agree that crypto and or stablecoins as separate categories are more likely to be adopted in the UK first?
I mean, again, I think the use case is important. For large value payments, so securities clearing and so on, I would argue we want a CBDC. You could argue, do we need, or you made the point, we already have reserves, there are book entry money, do we need token-based money? I think we do, but for certain types of transactions, I think, in particular to settle foreign exchange, but not necessarily domestically. So that would be where I think we have a strong case for CBDC.
Okay, so CBDC. Okay, so
for large value
payments.
For large value payments, yeah. Only for large value payments. For retail, I don't see the case, but I shouldn't say that.
Okay. So I suppose back to Sophia. So in terms of thinking into the future and the future of tokenized deposits in a UK context, and I assume that you're also in favour of them as an instrument, what would you like to see? What needs to happen to advance this journey more quickly or to make your vision become a reality?
I think if I can broaden it beyond tokenized deposits, because there's a whole world of tokenization that's going to happen. I mean, you can read a McKinsey BCG report. There's estimates that tokenized assets will be a $16 trillion asset class by the end of this decade. You've got already $850 million worth of U.S. Treasury bills that are tokenized on chain, right? So I think we need to look above and beyond that. And I think it's also important, at least in the tokenization world, when you're putting these assets on chain, they have to be denominated in something, right? So in our case, when we put bonds on blockchain, they tend to be settled or paid in USDC, right? And so that's really critical. So I think if we're coming at it from a UK lens, and this kind of goes back to what was said earlier, it's really about where the market demand is. It's really about, are we going to have a liquid GBP stablecoin? Are we going to have a liquid Euro stablecoin? I know there are companies that are trying to, grow and push that market forward. But at the end of the day, the crypto native market, which is the primary users of these stablecoins, for example, are demanding USD denominated, right? So I think that's one of the hindrances, is really thinking about where is the market going, where's the demand, and for what types of assets in what format, and what are sort of the currencies or digital forms of money that will denominate those assets. So that's how I think about the opportunity. And in my personal view, I think we have a long way to go until we see a liquid, heavily demanded GBP stablecoin. I think the US dollar, being, as it is the reserve currency of the world, is still the #1 currency of, demanded in financial transactions, and that is not going to change.
Anything to add, Ollie?
I guess the question is more like, where do you see it going? What does it look like? Mm-hmm. So I think part of this actually, is like you just said, is there's a bunch of things happening on the asset side, if I would call it, of tokenizing things. And there's some stuff happening on the money side, and it doesn't actually maybe have to be tokenized, but some enhanced functionality, is the two need to come together, right? Smart money is kind of, smart assets are really only smart when they start to have smart money to interact with, right? That's why we're seeing people like BlackRock using stable coins to settle, and other reasons why you might want to have that as well. I guess where I'd like to see it is, it could be a stable coin, but as I say, I'm going to put my camp in the tokenized deposit one, is tokenized or enhanced commercial bank money to interact with these smart assets, which then settles in central bank money, which keeps a pretty good status quo as you need. The reason why, that might sound boring to everyone who's a crypto native and wants to break it and change it, but that's kind of how things happen and how things get done. That might be a way to progress it and make it happen. Now that change in of itself might drive and spur some further innovation and change as well. But I think that that's a world in which if you start to connect these things together, it starts to become actually where you can get the value add, right? If I can, because a lot of this comes down to the ability to do programmable conditional things within this, right? We're talking about automating different journeys on the fund side or on the asset side. I think Johnny talked about earlier this idea of being able to do payments at different points, right? If I have a tokenized bond, great, but actually what I want is tokenized money so that I can do automated interest calculations, coupon payouts at points in time, right? And that's all done up front. I don't have to do any of the manual stuff to do that. I think that's the world we kind of want to get to. So it's really about automating a bunch of back and middle office things and getting that efficiency gain. There's definitely some areas where you get the liquidity savings and other things when you want to settle sort of instantly if you want. You can do that. I'm not saying everything would. I think there's a real value in netting things off sometimes. But that's the world I'd like to get to, and that's the world I see developing.
Okay, and then Duncan, from a crypto perspective, what would you like to see actors do or regulators do? Speaking from a personal perspective, I guess, in the UK.
Well, I think a clear regulatory framework for crypto will be important to encourage businesses to transact in this country. Look, if I look across our our business, our UK spot crypto asset exchange is in the UK, and we're a registered crypto asset exchange provider with the FCA. I mean, when we think about use cases, I mean, tangible stuff we have had from clients is, I want to fund and send dollars into your exchange and add collateral to it, but I can't do that outside of Fedwire hours. I mean, that's a real problem. Clients say, can we use a stable coin of some form, because then we can send it to you 24/7 whenever we want and withdraw it whenever we want. You know, we'd love to do that with a UK stable coin, but we don't have a product for that at the moment. And of course, getting the major stable coins that are out there in the market approved, that we're comfortable with and our custody providers are comfortable with. That's a challenge at the moment without stablecoin regulation. So those are two things we'd want. I think when I look across our wider business, so we sit within our energy and commodities franchise. So we have commodities firms that are looking at using stablecoins as part of trade finance. Why would they do that? Because of the 24/7 nature of it, so they're not constrained on making payments only to Monday to Friday during Fedwire hours. And also because of the precision, because say for example, you're doing a deal where you're loading some form of commodities onto a ship, and then the ship is going to the buyer somewhere else, you can actually program set payments to be made instead of doing it in one. Just, okay, when the cargo's on the ship, let's make one tranche of payment. When the ship is docked, let's make another tranche of payment. That's a tangible use case of a stable coin, because you can program it and you can use it with finesse, which is often difficult with the existing products. So short answer, stablecoin regulation and crypto asset regulation. I should also mention, by the way, some of these energy and commodities firms are now denominating trade in Bitcoin as well as a money alternative, because, and look, take my hat off for a while, there are a lot of people that don't want to be on the US dollar system, and they want an alternative.
Thank you, Duncan. So,
Can I comment on the crypto?
yes, and then if you could give us a view of your the future of CBDC and how you would like that to evolve as well, and then we'll go to the audience.
I think on crypto, so crypto for me is issued by an intangible entity. So Bitcoin is really the essence of it, and that's relatively similar to commodities actually, like gold. Gold is not regulated, right? And I don't think Bitcoin should ever be regulated as an instrument. Now, services around, if you take client monies in order to purchase, yes, that of course will have to be regulated. But we have wasted an enormous amount of time and energy on thinking about regulating cryptos, and I think we went down the wrong track. We should have said, look, it's like gold. We don't regulate gold. We don't need to regulate Bitcoin, and leave it there. That would be. On the CBDC future?
In the UK, yeah.
In the UK. Well, look, I hope for me, the UK, London is the most important foreign exchange hub in the world, right? 40% of FX is traded in London. The FX market has a daily volume of turnover of about 7.5 trillion, right? So it's by far the biggest market. And and sterling is one of the most important international currencies, not quite as important as the dollar, of course, but it is probably number 3 after the euro. And I would hope that the Bank of England sees the opportunity how a CBDC can serve in settlement of foreign exchange, because foreign exchange is all about, you buy euro dollar, meaning you buy euros and you sell dollars at the same time, right? So it's always a two-way trade. And what sort of tokenized monies are particularly good at is these bidirectional, instant and atomic sort of settlement. And I think it could bring enormous efficiencies, in particular for the foreign exchange market, and because London is so important as a foreign exchange market, to incentivize moving away from the current environment we have, which is mostly, most currencies, the big ones are traded through an institution called CLS, which is all about clearing and netting, right? So you have a long, settlement day, right? Which brings enormous advantages because it reduces the liquidity, and the funding is only a fraction of the trades you actually do. But if you were if everything were to settle gross instantly atomically, my argument would be you would even need less liquidity. So I think it would be a huge advantage over the existing system. That's something I wish the Bank of England would explore more. So the focus, if there is for me a single focus on CBDC, it is in FX.
Okay, well I think there's people from Bank of England and CLS here. So
Interesting point on that one. So ICAP actually did facilitate a intraday FX swap. We worked with a startup called Fintium and got 2 banks to trade an FX swap over a short-term horizon intraday. Now, interestingly, that didn't actually settle on a chain of any form. We managed to do that with traditional systems. It's difficult, but it was possible. But we've definitely seen demand from banks in general on not just on the FX side, but collateral management and being able to be more dynamic with that intraday in general. And I think everyone that we've talked to on that front understands that at some point a settlement asset that is common across the different institutions will be necessary for that. The question is whether that's whether you do that on a CBDC or whether you use like an industry consortium, something like Finality or something like that.
You need a very high-grade instrument. That's the key, and central bank money typically, of course, is the best. And and that is, it's that combination. And allow me to say, maybe the work we've done at Accenture on Project Jura and Enbridge, right, where we have basically built a completely new architecture how to settle FX by an outright exchange between residents and non-residents of central bank money. That's for me the future where I hope we will be going.
Okay, so can we see the results of our poll? I think someone at the back is going to show us something, possibly.
Yeah, also good questions there.
And yeah, while we get that up, Ousmène, the question which I've now lost, I think somebody had said something about your comment on cash is a relic and should disappear. Do you think that surrendering our history to transact privately and freely might be regretted? And then maybe we can get the results up while you answer that.
Okay, I'll be brief. Well, look, cash is a relic, right? I mean, what you understand being cash is a banknote, which basically started to be used prominently only in the 19th century. So there's nothing historical about banknotes, the sort of thing you think is cash. Cash is coins, actually. And when banknotes were introduced in the 19th century, we had exactly the same debate. Paper money, oh God, it's going to cause inflation, and there was, it was very controversial, you see, because everyone was attached to coins. So I think that the question goes in the same line, in the same vein. We now live in the 21st century. Everything is digitalized. To have a physical note that you transact and can only transact in physical proximity to your counterparty just seems very, very old-fashioned.
I'll counter that. I live in a very rural community that's 100 miles from here, where cash is absolutely king.
Okay.
I'm paying the guy to
for the
fix
wrong
boiler.
reasons.
But no, for connectivity reasons as well. So there's definitely probably a little bit of the wrong reasons going on. The guy who fixes my boiler likes to be paid in cash. I've never asked him, but he offers a better rate. But most of it is down to connectivity. I mean, I'm telling you, sort of anecdotally, the issues we're having to try and get fibre in and open reach and other things and all sorts. And we have blackouts in the winter and things like this. I mean, and this is, I live in Oxfordshire. I don't exactly live, in the Lake District, but I wouldn't totally dismiss the idea of, of cash disappearing in total relic. You do have to venture to other parts of the country.
Okay.
And I kind of like the idea of...
There's an infrastructure problem in the UK, I mean.
I think that's
you're not the only country. You're not the only country.
Yeah. So we might need to fix that first.
Fair enough. No,
so it looks like our audience have gone for stablecoins, but I feel like most of the discussion throughout the day has been very focused on stablecoins. So I wonder if that was front and center of people's minds, but maybe the discussion that we've just had has changed that. I think we've got like 2 or 3 minutes. I couldn't get the timer to work, so yeah, if we want to take some questions.
Hang on, Dave, microphone coming.
Just, by the way, I think Ollie was very unwise to admit to conspiring to defraud the Inland Revenue in a room full of lawyers, but can you strike that from the record, please? Just as a point, you had a question up there which said, since Scottish banknotes are legal tender, why can't stablecoins be legal tender? But Scottish banknotes aren't legal tender. They're not legal tender here. They're not even legal tender in Scotland. So that's a really bad example, just saying.
No, I think here the UK is special because the only legal tender really is the coin, right, which is by the Royal Mint. So, yeah. And the banknotes are only legal tender, the Bank of England notes are only legal tender in England and Wales. But it also shows you what does legal tender, is it really actually important, because it's certainly, it's no basis for success, for adoption, right? There are, most of the monies we are using are not legal tender, right? Your bank account is not legal tender. So why would a stablecoin need to be legal tender? Even in Europe, I think we waste our breath again on making the digital euro legal tender. It's not necessary for adoption.
Okay, any other questions? No?
Do we want to tackle some that were on?
Oh, yes.
Yeah, we can't see the ones that people have put anonymously.
Nope.
There was one about what are the actual uses of a stablecoin? So this last weekend I was out for drinks with friends, and then afterwards it's like we had to settle up our bill, and it's like, yeah, it's very easy to do that on, like, I don't know if you bank with NatWest or something, you can just send it to people, but actually the way we did it was over Revolut, because you can send an animated picture with it, and that's quite funny, right, to send that when you're sending money.
I'm sure it is.
Depending on your choice of picture, of course. But like, my brother lives in Canada, and if I want to send some money to him, typically I've done it through PayPal, but it's quite expensive, so I'd probably just send him a stable coin of some form, because he's got a digital wallet, and I know that it's going to get there very quickly, and it's not going to be that expensive. So that would be an example of where someone who lives in the UK might use it.
But then convertibility is key, right? I mean, it was said in the previous panel. I mean, it's about acceptance as well, right? Sending money is one thing, but then at the other end, people need to accept it as well, to convert it.
Okay.
You've got 3 minutes if you want to take one more question.
I don't know if you want to take the bottom one, Ousmène. So
stablecoin could be issued by banks, yes. Would bearer stablecoin? Yes, I think this bearer, I mean, and Duncan, you said it as well, is bearer really the innovation? And I'm struggling with that. I think it's difficult to describe what a bearer instrument is compared with a book entry, but I can see it's different because of what it does, you see. But the idea of a pure bearer is the banknote, of course. I tender you the banknote, you take it, there's no intermediary. But when I do, even if I do a Bitcoin transaction or whatever, there is the blockchain that will validate the transaction, so there is an intermediary. So is it therefore really a bearer instrument? I'm actually not too clear. But for me, the main point is, if a bank were to issue a stablecoin, and again, I wouldn't call it stablecoin, I would call it, a bank would never issue a stablecoin because it has its balance sheet and it will back, a deposit with its balance sheet. So it would issue a tokenized deposit. It would not issue a stablecoin, because I think the idea of stablecoin is you put monies aside into a special vehicle, which a bank wouldn't do because it has its balance sheet, right? But because a bank is fully regulated, the regulator should be completely indifferent whether you issue a deposit in a paper form or in electronic book entry or in a token form. So that's why I think, again, we have everything in place, and just coming back from the US as well and having met with lawyers there, it's completely uncontroversial that banks can issue tokenized deposits. What is interesting, though we haven't discussed here, is how do you clear tokenized deposits between different parties? Because the clearing is still key. So when I send money, when I bank with Barclays and I send money to Duncan, who say is banking with NatWest, what happens is that Barclays sends money in the large value payment system to NatWest. That's how it clears, you see. Now, with a tokenized deposit, there are 2 possibilities. The same way, so you convert it by the bank, or I can send Duncan the token, and he holds on to the Barclays token, and then can use it in a payment. You see? So that would be the sort of bearer character. I think that's where we should be going, right? And the interesting thing is then, it would be like a check. A check, many of you know, we can reassign checks, right? I can reassign a check, you can use the check, you reassign it to a third party, it can be used in payments. And if we give that property to a tokenized deposit, then I think we would have an instrument that can circulate, be accepted widely in our banking system, and and would be, I think, something quite innovative compared to what we have today. But that's, for me, where I think we should be going with tokenized deposits. And again, I wouldn't call them stablecoins. And
does anyone want to tackle the question on wallet limits on balances of digital money? Does anyone have?
I can comment on that, but I'm talking.
Oh, sorry.
And I think the Bank of England are trying to do that, and so are the central banks in their CBDC, retail CBDC.
I know, and in Europe we have the same debate, but I think it's a horrible debate, because it now means that the central bank will start micromanaging certain monetary aggregates, which is completely inconsistent with the inflation target the central bank has. If we have too many digital pound balances and it causes a problem in the money market or interest rates go, then the bank intervenes like it would with any shock.
Okay,
Prefix a limit, I think.
Someone's got a microphone. Yeah, last question.
Okay, I mean, during the course of this discussion, essentially you've moved from talking about a centrally issued currency to privately issued currency. Why does KYC matter? Criminals in the modern world are just as technologically sophisticated as any institutions. You can buy literally every kind of crime as a service now, online. Why do you think that KYC will prevent criminal activity rather than just be touching a currency that criminals don't bother using? Because they can either choose to use a currency from a different jurisdiction or find clever ways of maybe doing time shifts with how transactions occur, and things like that. Why does KYC matter?
Look, we have leakages in our system, right? I think KYC matters because we want to know, where the money is coming from, and that it is not used to whatever, finance terrorism, that sort of thing. So I think it does matter, but I agree with you. Can we really create a system that is so watertight that there aren't sufficient leakages, like using foreign currency, for example, right? It's always going to be a challenge. But my view would be the fewer physical currencies we have, and we would have to abolish them all, I think the better the system would become in terms of controlling where the money is and goes.
Quick one to answer this is non-KYC'd sort of tokenized money or stablecoin insane having limits on it. Like, is it really? Because any stable coin or any tokenized money that exists on a blockchain is pseudonymous, but every transaction is recorded. So why do you need like a limit, like you would have with cash, like on a threshold to throttle everybody what they use with it? Like if someone's doing something illegal or someone's doing something they shouldn't, like there's people like Chainalysis out there or Elliptic who can forensically look at the blockchain and say, right, who did that, who did what, let's trace the history of it. So you can go in and diagnose what happened. I don't think you necessarily need to stick a limit or put guardrails around it. I mean, that would be different with cash, right? Because you can't check these sorts of things.
Yeah. Okay, we're really going to get in trouble if we don't stop now. So thank you very much for the panel. We can continue the discussion later. Thank you very much.